Good afternoon and welcome. I'm Anli Hutting, broadcasting live here from the Nedbank stand at Nampo, Bothaville 2025. We've had a thrilling first 2 days, engaging with clients, journalists, catching up with old friends. It's been incredible so far. In this podcast, we're aiming to take the burning questions beyond Nampu by engaging with our online audience. That's you. Thank you for tuning in. Hot topics here this year have been global trade, growth, sustainability, innovation and technology, and of course, climate resilience. And those are the four topics we're tackling here today. And first up, we're talking about global trade. Global trade is currently in a bit of a shambles. Trade tensions seem to keep escalating, and South Africa is one of the recipients of massive shock tariff increases and increasing hostility from the US administration. The US market is relatively small for the agricultural sector, accounting for just 4% of our agricultural exports. But these developments, together with intensifying friction between the US and China, would create ripple effects across supply chains. And weaken our country's balance of payments, which impacts on the rand dollar exchange rate for exporters and importers alike. Against this backdrop, many agribusinesses in South Africa are wondering how to manage these shifting global trade dynamics to grow and diversify export markets. I'm joined by Shane Naidu, a global treasury and trade specialist at Nedbank Commercial Banking, and Lo Pinar, senior analyst at BFAP, that's the Bureau for Food and Agricultural Policy, to unpack the current situation and offer some advice to producers grappling with this very question. And of course, gentlemen, this is a topic we discussed in length at Nedbank's session here at Nation in Conversation, and we're going to look at those issues at sort of a granular level specifically for our online audience. Lo, I want to start with you. What are the broader risks and ripple effects of these trade tensions, and how should South African producers be thinking about their position in this new global dynamic?
Well, good afternoon and thanks for having us. It's great to be here at Nampo. So I mean, it's just obvious from an economics point of view that when we get to something as wide scale as the recent tariffs announced by the United States, the whole policy, it creates uncertainty. And in that environment, especially now when the policy it's on and it's off and it's 20%, 30%, 15%. So that volatility is concerning to us as economists at BFAP. And we're trying to think how this will all impact different markets. And really, it's difficult at this particular moment to know exactly, what will be the implication of the global trade changes. But only to say, my perspective is we haven't seen as a big economic policy that implicates so many countries and, of course, the biggest market in the world, the USA. Most prosperous in terms of per capita consumption. So really, the trade tensions are concerning to me. As an economist, I think of this that ultimately this will have to lead to inflation. So the impacts will be inflationary. But how the Trump administration manages this, we will have to see because we're now on a 90-day pause. We don't know what South Africa will have after that. But just to say, the ripple effects you mentioned is that if you just think we've got our own relationship, bilateral relationship with the US, but then the US has relationship with all others. So of course, agricultural markets will be impacted by the trade war between China and the US, even at now the lower rates of 30% and 10% respectively. So I'm a bit worried. I'm a free trade person. I think the benefits of that is large. So it's concerning to me that we've got now these restrictions. But we'll have to see what happens. I'm not exactly sure how it will play out. My gut feel is that I think the tariff policy will show to be ineffective and they might reverse course politically and economically, but we'll have to wait and see.
If the trade tensions escalate, what's the forecast? And looking at our agribusinesses and producers locally, are there certain areas of the sector that are more vulnerable? For instance, high value commodity crops?
Yes. So if we talk about obviously livestock and grains, then in this context here at Nampo, grains and oilseeds are mainly traded in South African context into the region. But of course, dollars flowing into Malawi and Tanzania, that implicates, the markets as well. When we talk about, let's say, fruit commodities, macadamia nuts and the citrus, then that's southern hemisphere, northern hemisphere dynamic. And that's obviously high value as you mentioned. Some of these value chains that will be particularly impacted by the US tariffs is citrus. So the Western Cape and Eastern Cape is citrus black spot free. So that's a pathogen on the fruit, and we've got preference because those areas are clear of that disease. So we can export into that market. So clearly, going from a zero tariff under AGOA, the Africa Growth and Opportunity Act, to maybe a 10 or 20%, that basically kills off that market. We need to find new markets. So yes, some of them are localized, but again, the uncertainty globally might affect canola prices, for instance, and also because the trade tensions are very variable. The UK have now signed a deal with the US, but they've remained on 10%. So it might be now in the future for those listening online that we might be moving into a world where the US decides to stick to the 10%. And we haven't seen that for 60 to 80 years, where we just go flat rates, universal with all products. So it's a bit concerning, and some industries will be impacted more. But again, as we discussed in the panel here, is that there will be opportunities as well, definitely in Africa and new trade partners. Maybe we can fast track implementation of new market access and the like. So it's not as if we sit here and think, oh, all is doomed. The vibe here at Nampo, you can see everyone is still optimistic. They are investing. There are many companies and businesses here that's related to the agri sector that remains optimistic. So it might be tough for some industries, but and globally, but we're still positive.
No. Shane, you've got a unique perspective across the banking portfolio. How exposed is the agri sector to the shifting terrain at the moment?
So yeah, good afternoon. I think it's completely exposed. Doesn't matter whether it's agri commodity or hard commodity. I think the dynamics now coming out of possible macro factors, which is tariffs, affects a flat fee across a jurisdiction. So South Africa's got that flat fee, as we talked about. There's possible static talks about increasing that post the reprieve. And from our perspective, which cuts across different commodities and solutions, we often find that for a business to have financial readiness and the ability to ensure that should something happen post that 90 days or latter part of this year, is the business ready? Can it survive? How resilient are they? How do they diversify not just their value chain, which we'll come back to, but the products they sell in the market they sell to? So it's completely susceptible basically to the US, but what we talked about is how do you take it from a macro perspective to micro? So focus on what's in your control, which is the business. How do you penetrate markets? Those are something that we have solutions for in businesses, and we mentioned that, Nedbank has a different strategy or lens about how we see inter-Africa trade. So from a business perspective, or what's in your control, we have insights through owning subsidiary and equity through organizations like EcoBank, which we own 22% of. They're very well represented in both West and East Africa. So when a business needs to move into a country, it's understanding the sovereign risks, the dynamics, the currency risks, the challenges as well. Will I get paid? Should I export my commodity? Should I export it without a trusted relationship? What are the tools that you have in place to support me? And as we mentioned throughout the latter part of today as well, is no specific one organization can do this in isolation. So we need a collaborative approach with financial institutions, value chain providers, logistics providers, regulatory bodies, insights and infrastructure to inform a business to grow.
When we talk about future proofing, what does that actually look like for a producer or a processor? And are we talking new market access, new finance tools, logistical shifts, or all of the above at the same time?
Look, it's a great question. I think we have a baseline of solutions, which we'll talk to, and some of those I mentioned, but it's very difficult to tailor make a solution for a certain different industry. So we probably need to have what we call trade advisory service to understand how do we work together to tailor make something that's unique for your business. Is it something that you're going into a new market? Great. I mentioned things like African Bank, where you can provide insights, certain bodies like the Red Meat Industry Services, BFAB, and free organizations like that provide insights to say, do you understand the market you're going into? Is there margins? What is the political risk? What is the economical risk? Or the general pesto analysis we refer to. Then, of course, from all of the above, what we often don't see if we work in isolation is the guys that move the commodity, the freight forwarders. Then you have marketing agents, as I mentioned as well. Then you have industry bodies like reserve banks in Africa that have different type of legislation versus our type of legislation. There might be a disconnect. Where in Europe, you have more flexibility to move that in a free trade agreements. So if you look at collaboration, it's really sort of starting somewhere to say, what is the product? How do you diversify? How do you create efficiency? How do you make sure that you have hedging strategies, be it commodity hedging, be it currency hedging? How do you make sure that you reduce dependencies on a certain market? And I think that's what we refer to basically as business readiness. It's ensuring that should 10 or 30% or whatever this amount be eroded, do you have the ability to survive and continue growing?
Essential then to not just have a bank or a financial institution, but a partner advising you throughout these complexities and volatility that isn't guaranteed to stop anytime soon.
Correct. I mean, just to hone in that point is the market's very static. So, my colleagues have mentioned, you have intraday changes. So how do you hedge against that? It's so difficult, and it's very difficult when the morning it opens up and says this is the strategy for today, and you get guys that back out and then procure based on what's said this morning. Come 3, 4 o'clock, that's changed. So this is sort of instances where we're trying to say these dynamics will always be there. How do you future-proof your business? The best way to do that is ensuring you have a saturated concentration of customers, you have a diversification of products, and I'll give you a practical example. We talked about citrus. So one of the products that we quite pride ourselves on is fruit juice. So how do you move from a citrus producer to becoming an agro processor of that material? In that way, you make sure you increase your margin and you keep on growing throughout the value chain.
Great to see that Nedbank is ready to step into that role as an advisory partner. Thank you so much, Lo. Thank you so much, Shane. Stay with us. After this, we're going to be talking about climate resilience.